Okay, so this is for July 31st, Monday, for the weekly top-down analysis for this week, which is basically the official first week of August. Even though today is July 31st, right? Yep, July 31st. Okay. All right, so let me go ahead and update some things here. Make sure I capture the right information. Sorry, today, July 31st. Yeah, Monday. Got you. Okay, so yeah, today, July 31st, Monday. And let me go ahead and capture this real quick. All right. Take a snapshot of that. Okay, now we're ready. Okay, look like Monday seems to be pretty full, so let's get into it. All right, so we have Sunday, really not much. Chinese, not worried about them. Look like we have some Australia and New Zealand dollar numbers come through, some economic numbers, but we also have Japan preliminary industrial and retail sales. So industrial is production 2.0 and retail sales is pretty high. So that's actually pretty good for the currency. We'll see. Okay, so Monday, what we got going on today, we had some consumer confidence, which is pretty high, and housing starts yield on yield. That was just economic data. Then we have some euro and pound, nothing significant other than normal CPI, things like that. Today we have Chicago PMI at 945. I don't expect much volatility in the forex market and indices market. Typically just a normal ebb and flow Monday. So we'll get into whatever trade setup we can get. We'll look at S&P 500 and oil and see if we can get an opportunity this morning. Okay, and then we have Tuesday, August 1st. So tomorrow will be officially Tuesday. So Swiss franc bank will be closed, but then we have our number one bank rate decision, and that's going to happen just after midnight, 12:30 a.m. Eastern time, which is 10:30 Mountain time, and or 9:30 Pacific time. It'll be damn near close to 5:30 a.m. UK time. So that's going to move the market. We all know that. Now, what we don't know is what the market's going to, how the market's going to accept it, right? So they're expecting to raise the interest rate by 0.25 basis point. They raise interest rate by 0.25. It's going to expect to be strong, which is good for the currency, which is where we want if we want to short a lot of good setup for the odd euro, odd pound, odd. Then you got odd JPY, things like that. So anything odd Swiss francs, you want to look for some opportunities going longer on those currencies. Expect to happen tomorrow night, or basically tonight, tomorrow officially in the morning at 12:30. But I expect to see some currency movement on odd, and of course that's going to be for New Zealand. And then we're going to go into a lot of the euro currency. So expect some volatility happen at 3 o'clock. It's going to move euro and pound. So we should see some volatility start to come in on Tuesday, London session. It's going to look like it's going to be a lot. And then we jump into some New York news and New York session. Late New York session about 10 a.m. Again, this is light news. This is going to be a great opportunity for some good trade setups for indices and oil. And then we have New Zealand coming in to report their numbers, and I'm going to expect these numbers to be strong. So that, Australia to be strong, New Zealand to be strong. This is going to be a great week for both of these currencies. So I'm looking for some positive outcome for pound and NCD, which is at a frustrating location for a lot of the odd NCD pairs. So yeah, tomorrow we're going to start the week with a bang. That's going to be freaking awesome. If we have not already started the week with a bang on these two currencies, that's going to be interesting. We'll see what Japan does. Japan got some little monetary base comments. I'm not really pleased about what I'm seeing with, JPY pairs, and we'll see what happens with this JPY. See we get some hawkish comments coming in. Boy, it's just not really pleasing to see this, but thought we were going to make some traction last week, and all of a sudden it just kind of faded back, basically the whole thing, and made us and put us back into a waiting situation for all the JPY pairs. But we'll take a look. And Wednesday, we just have ADP non-farm payroll change. That's going to happen around 8:15. So expect to see some volatility around that time. Great time to trade euro, gold. Indices and oil is going to be pretty much a good thing all week. That's it on Wednesday. So far we only have one central bank rate decision that's coming in tonight or tomorrow morning, 12:30 a.m. Thursday, we have Swiss France come in with their CPI data, so that's going to move the market around Thursday with the CPI. And then we're going to have some euro volatility happen on Thursday. It's going to be some good movements on euro happening. And then we're going to come in at 7 a.m. Ooh, we got our second bank rate decision. There it is. Ding, ding, ding. So on Thursday, we have pound. 7 a.m. in the morning. Yeah, we'll be here. We'll be on, we'll be live, and they're looking to raise their interest rate at 5.25. And I don't know if this is going to hurt or help this currency. Now, pound's been weak lately, right? For the last week or so, it's been given lower lows, lower highs. I'm not sure if this is going to cause it to give it a little bit of boost up or a boost down, right? So it all depends on how the reaction of the government react and take that currency. So that's going to be interesting to see. Okay, then we have 8:30 unemployment claim for the dollar. 8:30 that'll move the currencies and gold and anything else. So not a lot of heavy USD news, but we got two central bank decisions, one tonight or officially tomorrow, and then one on Thursday, 7 a.m. with the pound. And then that's it. And then on Friday, we'll close it up with a big one, non-farm payroll. It'll be for both CAD and USD. So that'll definitely move the market. That is probably a market we would not want to trade. We will be there in the morning to follow up on all the other things, but we'll take a trade on and look for setup for oil. So oil will be our currency or our market to look at for that particular day on Friday. Okay, so let's take a look at the currency strength at this morning as of Monday, July 31st. Ooh. I like that. So we got some Australia's currencies at 32.79. We got New Zealand. They're both kicking butt right now. Look, this is kind of weird, right? You got two currencies at top and one currency is in the bottom and everybody else in the middle. So we got Australia, New Zealand, very, very strong. This is horribly weak. And I'm telling you, anything below 50 right there, this is 60, but anything below 50, oh my God, this is like dangerously weak, right? So JPY is getting pounded right now with the weakest. So I'm expecting this one to fall when we take a look at the chart. And then we have everyone else in the middle. Right here, we got USD and Swiss francs, and just basically, if you think about it, it's been like that all Asian and all London session. Right now, it's about 7 a.m. New York time, right? So this has been, it's been like a ranging, this is what a ranging conditions look like for the dollar, pound dollar, euro dollar, Swiss franc dollar, and CAD dollar, literally not doing anything. So anything with dollar related didn't do much, not even in Asian session, or I mean, not even in London session. So normally, typically, you get a London breakout. That was not a breakout. Just literally been a range in Monday. This is what a range in Monday typically look like now. Anything, long against the JPY is probably the best trade to set up. I mean, right when you saw this start to creep out around 9:30 p.m. Eastern time, you can see that, it just continued to fall. And JPY is right now the weakest. Now, it's good to see that we saw Australia and New Zealand kick up, right? So that's going to be good for a lot of the AUD and New Zealand pair leading into some key fundamental news this week. So we got Australia, we got pound. Bank rate decision, but New Zealand dollar is supposed to report the unemployment or employment numbers as well. That'll be on Tuesday. So it's like back to back for Australia and New Zealand. So it's going to be good for the currency. Okay, so with that being said, let's take it to the charts. Take a look and see what's really going on in the market now. Okay, so we got the dollar going up. Well, no, wait, hold on. So I said dollar going up as I see this arrow right here. So let's take a look. This is the daily chart on dollar, which it's not in a nice little downward channel. So let's zoom in here and see what's going on. Okay, so we got the dollar still looking bullish. Today is a little bit of ranging conditions. But overall, it's still looking bullish. It's still coming off a nice high from Friday last week. So got some volume imbalances here, I see. So in my opinion, it's still looking bullish. We're still very strong. In terms of we raise interest rate. So let's see what the Fed is actually have in store in terms of the remainder of the currency, in terms of any interest rates moving forward. See what the outlook is. So we got the next meeting happening in September 20th. And right now they're saying it's a 79.5% probability that they're not going to raise interest rate, right? Whoa, that's starting to creep up a little bit to 20.5. I would say economics, it's coming in kind of mixed, right? It's coming in, GDP is saying that the GDP numbers last week is saying that the USD's, the US, the economy is very, very strong, remain kind of resilient. We'll see what this non-farm payroll it's like. CPI, PCE numbers came down a slight bit, but not anything significant. I think the employment number this week is really going to help us data to really say, okay, are we, the labor market really, really strong, and U.S. is still doing really, really good? Because that's actually not going to be great for, the U.S. conditions if we're trying to lower interest rates. So what's going to happen is we'll end up catching a comeback on inflation, and then inflation can come back even harder and become even more difficult, right? And here's a dangerous point for where the Fed is looking at. If interest rates start to creep back up again, I think we were reporting around 3%, right? Let me see where the economic trade economics, what the interest rate is right now. Some indicators here, interest rate. And not interest rate, sorry, inflation rate. US, yep, okay, so US is reporting around 3% interest rate. So it's actually coming down. I mean, compared to a lot of the countries, right? Japan barely at 3.3, so it's not bad on the interest rate. I mean, inflation rate, but we're reporting 3, and we just came down off of 4.1, which was huge. Now, if this number start to come up, 3.1, 3.2, that's actually not good. That means the United States feds are allowing the inflation rate to come back up, and they're going to need to continue to raise interest rate if the economy doesn't, start to slow down to their target. If that's what they're saying, they want to get it down to, and that could be a sticky situation. What could happen then is the Feds raise interest rate, this dollar is going to start shooting up even higher, and therefore it could cause the economy to go into a recession, right? That means indices will start to fall right back down, and we're going to be going back down for the rest of the year, and they'll be looking at a dire situation of what they call stagflation. It's when you have high interest rate and you have high inflation rate both at the same time, when you're supposed to have a lower inflation rate and as a result of higher interest rate, right? But if you get into a stagflation situation, this can cause the economy to get into a sticky situation, and that's not great for the economy. It's not great for the economy in terms of people, job growth, buying houses, cars, and things like that, because that's high inflation and the inflation interest rate is high. It's not a good mix. So we'll see what happens. We'll look at the numbers each time, and we'll see how that economic data of the Fed watch tool, see if it changes in terms of probability of them raising interest rate. So right now, even though we look like we're pausing for the week, I'm going to say that we are still bullish, right? Move this to the side. I am going to be bullish and take a bullish stance until I see, something change. And the change, I would say, it needs to come down. I would say it needs to break this structure for me. If it breaks that structure, and it starts coming down right here, well, it needs to break and stay break and retest and start to come down. This is when I would say, okay, maybe we are getting ready to be bearish and stay bearish. And this is the end of the bearish market. I mean, the beginning of the bearish market, because we just broke this low and we didn't stay below this low. This was the low of the market here. This was the low of the market. So because we didn't stay below, we broke this low, which is great, but we're right back into it. So this means if we don't get below it, that means the dollar still could be resurging back to its strength. And if that happens, we're going to be looking at some very, very strong volatile weeks. So as of right now, I'm going to take my stance and say, okay, my bias right now is with the dollar until we confirm bearish with breaking some new lows. We're creating new highs. So in my opinion, this is bullish. Now, of course, this bullish run right here could be just simply a rebalance to cover all of the imbalances from the fall that it had. And that could be possibly true. And if that's the case, then we'll see some rejection, more rejection, more rejection. And then we start to see some fall, right? So this week, expect a ranging condition week. However, I do expect to see some bullishness, and we'll probably be in a ranging condition basically all week until non-farm payrolls. But in the meantime, my bias stance right now for the dollar is bullish. Okay, let's get into some other currencies, and then let's see what's going on. Let's start with gold, which is inverse correlated. Okay, gold was looking bearish because the dollar was looking bullish, right? Now we're stalling here. We're stalling. We got this low, we got this high, we got this low, we got this high, and this looks like it's in a bull run, right? But what I'm seeing here is we're also meeting some high liquidity previous levels, which is right there, right? So in my opinion, this is a great break of structure. I agree with that. Great break of structure, awesome. All we need to do is stay above. If we stay above that, then we're looking to take and go to previous record high. If we do not break that, right, this would be a key level. If we do not currently break this 19, I think I'm gonna call it right here about, let me see, 19, 2000, price 2000. We're pretty 1998, 1998, 99. So let's say 2000, just 2000 might seem to be a very key level here. And I think you guys can see that on the daily charts for gold. This does not break. Well, I'm looking to see this thing come down, right? So in my opinion, long-term view on a higher time bias, I'm bearish on gold still, right? Until we break and stay above this 2000 mark, I think gold still has some opportunity to still come down. And this marker right here is my mark. We got some imbalances down here, right? If I was to put this on an equilibrium standpoint, yeah, we came back down. We rebalanced to 50%. In fact, we came down to 6.618 magical Fed number, right? 6.8, great. Nice little bit rebalance. If we do not break that 2000, we're coming back deeper. And we're going to come in deeper into the 786, 886 level, right? And that is about as far as I do see gold come down to at all, right? I don't think we're going to come down below this. The only reason why I think we would come down below this is if the Fed raise interest rate one more time and we get into a stagflation situation to where the economy could be looking at a tipping point to a recession. Yeah, then we're coming down here. This is coming down. This is going to fall. Okay. So as of right now, I'm just going to take the stance here. It is bullish. It is, but I wouldn't trade long, right? I wouldn't be looking for a long-term trade, or every time I take a trade going long, I am not looking for that to be sustainable, right? This is going to be a great scalping opportunity on a lower time frame. Obviously, we have our expert advisor semi-auto system that's going to be taking care of a lot of the little trades going back and forth. But from a manual trade standpoint, this thing go long, it got a break, and I'm good with taking it long, but I'm not sustaining that until it comes back, retested it. Obviously, there'll be some rebalance here, some fair value gaps, rebalance, come back, and then stay above, and then we're bullish. But other than that, I'm staying with a little bias tone to the bearish side for gold. Sticky situation, it will be foretelling this week. Again, with non-farm payroll and more news coming out this week, and this will really let us know what's going on with gold, just as well as the dollar. Okay, so let's look at the pound index real quick. Okay, pounds is making new lower low. That's great. Do we sustain this little lower low? Do we continue to go down? Okay, and we will. We're actually going to know by Thursday. We're going to know is this is going to go up or it's going to go down. And my best bet, I think it's going to come down. Right? I don't think we're going to make new higher highs. This has been pretty strong for pound. Pound's been doing really good. This was a great run for pound, but I think there's a little bit more rebalance. I'm going to stay to the bearish side right now for pound, and I'm still looking for 1.27, 26, make new lower lows. We haven't taken out this high. I'm on the bearish side for pound. Swiss French, yeah, drop. That's all I want you to do. I don't want you to do anything else. You see how quick that was, my bias was decided on that one? Yeah, bearish. Let's go, right? And that's where I'm at with this one. Let me go ahead and clone this real quick so I can show the swings part of this market, which is right here, right now. And we are making some new lower lows, which is good. Let me swing up a little bit. We came up, retest, and now we're right back down. So nice rebalance here, covering this fair value gap. We got a lot of imbalances to go, baby. Swiss francs, I'm not going to be surprised with Swiss francs for the rest of the year. I expect nothing else but to continue to just drop and continue to make new lower lows and lower lows. Swiss francs, bearish. Euro, I'm still on the bear side of Euro. It's bearish. It's making new lows. Lower low, it just made a new lower low, hasn't taken that high. Just kind of looking similar to pound, with the same bias, right? I'm looking for Euro to come back down. Now it's not going to come back to the $1 mark ever again, but to basically parity with the dollar. I expect it to come down maybe to about 1.08. This is my market here. It could come down here to about 1.06, but that is about the lowest I'm going to see Euro. So pound and Euro, to me, brothers, stepbrothers and sisters, I expect it to come pretty close. Canada, I do expect Canada to continue to be weak, right? This is my mark right here on this trend line. So this is going to be foretelling a couple of reasons. Number one, this is going to be my number one first target here. And let me go ahead and clone that. So this is going to be my first target, about 0.75. So 0.75. That's my first target for Canada. And then I see Canada, if it breaks this, then Canada's coming down here. We're going to cover this imbalance. We're going to come down here. And this would be 100% retracement for pound at this point. And I'm talking about from here to here. We came back, we tapped at 50%, which is nice, but it's not good enough, right? I think it's going to come down a little bit more. It came right off of that supply. I think it's going to come right back to just the demand level. We still got this imbalance. They got a, a discount imbalance there that I still see it to come back and mitigate. But at least I like to see it come back to 0.75 again. That was a nice new high. We haven't been making new highs at all, been making lower lows. So Canada, I expect to be a little bit more weakness on Canada for the rest of this week. Australia, I think Australia is basically going to be making our strength. So this is where I'm seeing odd making some strength. Odd is kicking butt right now, doing great. It's pretty much fading out anything that was weak on Thursday and Friday. Anything that was frustrating on Thursday and Friday for odd, looking good today. Okay, we'll take a look at some odd in currency and NCD currency. Same difference. Look like it's holding. I'm expecting some more bullishness on both of these currency this week. It did come back to the point of demand where we saw. All I need to do is see some new higher highs. That would be good. If we don't, then we're going to be hovering around here for a little bit, but I don't see that happening. So I'm going to stay on the bullish side for both NCD and pound. All right, lowly Japan. What the hell is going on? Jeez, give us a break. All right, so Japan has come down pretty close to its lowest low, but lowest previous low. Now that doesn't mean it's bearish. It's really going to be foretelling this week about what's going on with Japanese yen. We take out this low, yeah, we're going to come back down here. Right now, this structure can still hold. This could be basically a higher low, right? It could be. I don't like the fact that we're back to close to the previous low. We're back to that market structure point that I wanted to see break. It did create a new lower low as of Friday, and today it's just confirming that new lower low. I'm right now, I'm neutral until we break out this low right here. Until we break out this low, then we're going to be bearish, right? We're going to see some new lower lows. This right here could be highly possible. I don't like to see that, but obviously because my bias is I'm in some shorts of JPY pairs. I don't want to see it come down to down 0.006 yen. I don't want to see it come down to this market from a structure standpoint. I'm not even worried about this. It's not even a pair from the price level, but this is where I'm expecting it to come down to. Yeah, other than that, I want to see it hold some strength. So we got some economic data coming in for yen this week. Let's see what the yen do. The yen minutes got coming in. Other than that, it's going to be a bearish day for yen because it's bearish today. Okay, so other than that, I want to see this currency and see this is pretty close to 50% rebalance. That was great, but we had some Japanese news last week, and we saw that the Japan was looking into the interest curve and the bond yield curve, looking to maybe relax a little bit on the monetary easing, but this doesn't look like the case. It looked like they did a fake move and said, "Oh no, we're going to stay with our monetary easing," and it crashed right back down. Everything that got was positive just faded, right? So that was the interest rate decision. Now, hopefully, the aftermath is it's bearish. It is. It's weak. It's bearish. But I'm hoping because it didn't take out this previous low, we may just hold, or we may just come back and give it the same low. If not, when we break that, yeah, we're coming down here, and that's not going to be desirable for Japan yen currency. Okay. All right. Let's get into some other markets right here. Let's start with the S&P 500. Wow, we have not gone anywhere. We've been here at this level between 45.35 and 45.80. So 1, 2, 3, 4, 5, 6, 7, 8, 9. It's been a nice 9 days here, which is pretty stubborn, right? Having a hard time breaking this previous high because you got to think about it, right? Once this thing break this previous high of March of 22, that was last year, not this year, of March 22. It break this high, which is 46.40. The market's fully recovered, right? Market's fully recovered. We're on a bull run right now for sure. I would say we're on a recovery bull run, but are we 100% recovered? We're on a full recovery from a bear market, but it's not over yet. It's not over until the fat lady's saying, in my opinion, and that 46.40 until we get to this marker right here. I don't call it a full recovery for the economy or the market right here. It's going to need to be that break, and it's going to need to be that break right there. Okay, and right now we haven't done that. So I'm expecting this. Believe it or not, I am bearish. I do expect that market. Oof, that would be horrible to see that come down here. Yeah, I would agree, but it's still not bad. I mean, it's showing, some concerns in the market if we come back down here, which I would see, and then we come back up, right? Then we start to make that recovery up here. I can see that. So let's look at it on a fifth level from here. And let's bring this up. Yeah, we haven't rebalanced. So this is why this 50% equilibrium, in my opinion, just have to make a little bit of sense here. Where's my equilibrium? That's break even. Boom. Okay. I'm looking for S&P 500, the indices. Wow. Yeah, I'm looking for a little bit of bearishness here. All right, let's look at oil and then Bitcoin. Let's look at oil. Oil doing just what I said it was going to do. Just nicely. Just nicely. Oh my gosh, it's going right up to Oil right back to $81. That is awesome. That is really, really good for oil. So oil looking really bullish. Yay! You broke that middle level, right? 74 psychological level, and then it went right up to the 80 level, which we caught a nice bullish run on Friday from a short oil trade. I mean, a quick scalp oil trade, but it was like a little bit later. But this was nice. Okay, now what? Well, let's take a look. So oil has not rebalanced, and it's looking like it needs to pull back a little bit, right? So I would expect oil to look a little bit more bullish. If we don't take out this high, this would be the next high right here. So buy side liquidity, and that price is around 83.5. So I'm expecting oil to be bearish, right, to about 74, 75. This is what I expect oil to be doing, right? And then I do not see us break this, right? I'm seeing it come back down. Okay. You get oil starts going around above 85 and it goes back to $94. What do you guys think will happen? Gas prices, inflation, stagflation, higher interest rate, not a good condition. Would you agree? We get above 85, we'll start looking back to them $5, $6 per gallon days, especially in those high price oil places and gas prices. Okay, so I don't think people's going to be excited about that. Well, yeah, you guys can afford it. Flat stock, you guys got jobs, everything's working, you guys doing good, economy's doing great. Yeah, but not with high inflation. I'm telling you guys, stagflation is going to be the word that you guys may need to revisit that one because it's not going to be pretty. So, yeah, we want oil to be bullish because we're traders, but we don't want it to go up and keep going to $93 a barrel. That's going to be some serious pain at the gas station. Okay. So I'm looking to see a little bit of correction from this nice little straight bull run with a nice little pullback there. So any day now, I'm looking this week. Let's see some better side on oil. Okay, how about Bitcoin? How's Bitcoin doing? Bitcoin is doing exactly what I said it was going to do, just kind of ranging. It's doing a lot of ranging conditions. I do expect that little pullback there. Let's hit this, probably right there, and then boom, let's go. All right, so that was a nice 31. I don't see Bitcoin dropping below 2,700. And then I'm expecting it to go to 30, 39, 40,000 by year end. Okay, so that's Bitcoin. Let's get into some Forex pairs. Euro USD. I'm getting to a little bit higher here. Get rid of some of these markers. Sorry about that. Oh, what are we drawing over here? What is this? I must be doing some training. Just doing some coaching and training. That's what we do. All right, so euro dollar, yeah, still bearish. So I'm bearish on euro dollar, and I'm expecting euro dollar until something tells me something different with the dollar strength. I'm expecting this to maybe do a little bit of a pullback, just a little bit like this. And then I'm expecting it to come down to this demand zone area. Yep, just like I figured. 1.06. So that's going to be my level. So it's going to come down to this level of liquidity. This is what I'm expecting it to see to come down to. So we'll see if it does. But 106 is my line in the sand for your dollar. Okay. But we got to break this low right here. We got to continue to break lower lows. If not, this may be the line in the sand for your dollar, about 108. And then we'll go up. Okay. Pound dollar. Yep. I'm looking for pound dollar to continue coming down. Let's go right here. So I'm expecting it to come down to about 1.23. That's going to be my marker. I'm going to put it there. We're making lower lows, which is great. Couldn't break that high. We're making some low. We break this low right here. This is going to be great. It's going to be great for for those who shorten pound dollar because it looked like it's in a bear run. So definitely in a downtrend. Definitely in a downtrend. If you want to trade pound dollar, I would look for shorts, right? So $1.23 for pound dollar. Okay, odd dollar. Odd dollar is going to be ranging a little bit because that look at this. This is one raging pairs. If you want to trade a currency, do not trade an odd dollar pair. I'm expecting, yeah, odd dollar to continue ranging. Dollar's going to kick up some. Odd dollar's going to kick up some strength. This is going to cause some ranging conditions, and I would expect this currency to look something like this, and then we're going to start to break out, right? And this is if we see the dollar weakness. We may see a little bit of dollar weakness, or this may be more about our strength more than the dollar weakness. And then we're going to see some dollar strength, and then we're going to see some more dollar weakness. We're going to see some odd strength, and then we'll probably see some dollar weakness. So right now, I'm seeing this on the upside. I would look to buy odd dollar, right? So I'm a little bullish on odd dollar. NCD dollar, a little bit bullish on NCD dollar. Yep, same. It's the same ranging conditions here, right? Not a really upside potential. That was a nice drop. I'm expecting it to come back up here now. So I'm bullish on New Zealand dollar. Okay, bullish on New Zealand dollar. I'm bullish on Australian dollar. We can get this out. Dollar CAD. Dollar CAD is just, ugh. Come on, right? Dollar CAD is bullish, looking nice. And we're about to probably see some, this is what I'm looking for. This is my long-term view on dollar CAD. I like to see dollar CAD come up to about 1.35 and then boom, let's go. All right. This is right here. It's still in the premium, it's in the discount, still in the discount. I would not want to short it in the discount. All right. And you could have shorted there, but not right here. I'm looking for it to go up. CAD weak. It's going to be more about CAD weakness than the dollar strength. Let's go up. All right, let's go to the next one. Dollar Swiss francs. Come on. You know what I'm looking at. Nothing else but the bulls. Let's go. This is going to really be about Swiss francs weakness than it is about the dollar strength. Okay. And that's where my long-term view outlook for dollar Swiss francs is. I was bullish on dollar Swiss francs. I thought it was going to come back up here, but look like we may just come up and just rebalance that level, right? This is my equilibrium price right there. On its overview from this swing high and this swing low. Yeah, that's what I'm seeing right now with dollar Swiss francs. Go ahead and put some swing points there. I'm gonna clone that one, and that looks like that might be a pivotal swing points down there. Would you guys agree? That looks pretty good. So dollar Swiss francs, this is a better setup than NCD dollar and odd dollar, to be totally honest with you. I would definitely buy this. I just want to do nothing but else to just let's buy the damn thing, right? So I'm again, this is an all higher time view, right? Dollar switch, dollar Japanese yen. Okay. Do not take out this high, please. Just go here. I'm good with that. All right. This is going to be mirroring or inverse mirroring. You know, Japanese index, and it's going to look like it's going to cover that, and then hopefully we get this break right here. All right. Hopefully we get this break, and we get some yen just start kicking in. This is about as high as I can see it go. I mean, this is, you know, it is bullish. Don't get me wrong. I'm bullish on dollar yen, even though that means I'm bearish on yen, and that would be true. But dollar yen definitely looks like it's got a little bit more to go. That was a nice drop. It's creating new higher highs, and it looks like we may get this break up here. Now, from a swing standpoint, it did hit that 50%, and then it just bounced right back up. But I think it got an opportunity to come back to a double top, give us the M pattern, and let's go. Let's drop this, right? So right now, I wouldn't short dollar yen. I would actually buy dollar yen until about 1.44, and then I'll be looking to sell it. All right, let's get into other yen pairs. Yes, I know. All looking bullish. To me, they're all just coming back to testing the highs, and then I'll be looking to short it. I would be shorted, even though they're looking kind of bullish. I'm on the short side for year-end from a mean reversion standpoint. Same difference here with this pair. Yeah, with this pair, I'm looking for pound yen to come down. This is not what I was looking for it to do. So I was looking for this to continue down, and we got that Japanese head fake right there, Japan's head fake, boom, boom. And this is going right back to the top, right? So I don't want to see it anything bigger than that, and I would like to see it drop. But hopefully pound weakness will give us that break. But this is still in the highs. All right, so I'm still bearish on pound yen, CAD yen. Yep, CAD yen still looking kind of, we might see a rebalance, but other than that, I'm still looking for this move down here. I like this. That was a nice move towards the rebalance, but it didn't get there. So I'm still on a higher time frame looking to see CAD yen hold this highs. All right, this is going to be a really foretelling week for the yen. Right, it was looking all nice and bullish, bearish, and now it looks like it's coming back to retest these levels. So I'm still bearish on yen. And NCD yen, same thing. Come back, test that high, and let's come back down. So New Zealand yen, I'm short, and Swiss francs, of course. This is that November all-time high, 1979. We're way above that. Now we're at an all-time high 2023, and it went right back to test that new high, right? So I'm looking for Swiss francs to kick in some more weakness, and hopefully we get some more downside to this currency. So I'm still looking for this currency to come back down still. Okay, euro odd. Yes, love it. 1.55. I know it's ranging conditions. I know that looks nasty. Trust me, I do know that looks frustrating nasty. I mean, especially from June, and we basically didn't create any new highs. right? And we didn't create any new lows. So in my professional opinion, this is still looking, bearish. And I'm expecting that to happen this week. So the breakout is my goal, to see this breakout and start heading towards this goal, right? So that is mean pound and euros going to have to be weak for this to happen. And I like to see that happen. I like to see that come down to about here, and then let's go, right? Let's see, from this swing to that swing, we did get that little rebalance to 6.18, and then we got a nice little bounce. It didn't rebalance there. It still hasn't rebalanced totally from this swing low down here. So I like to see it come down to about 1.55. I'm gonna still hold my bias to the short side, especially when you see in markets like this on a higher time frame on a weekly, right? Just on the upper end. And I would, this is going to be a nice little trade there. So I'm still on the bearish side for euro odd. Okay. Pound odd. What we're doing, pound odd. Pound odd is the better setup than euro odd, for the simple fact that we had this nice bull run on pound odd, and I'm looking for pound odd to still come around this rebalance point right here, 1.85 and down to 1.74. It's going to be a nice fall. This was a nice retest, and now it's dropping back down and looking beautifully too. That was a nice, it's dropping nicely. But I got to see it break below that level. Let's come on. Let's break this level right here. Let's break and stay below. That's the piece. We see that break, we're done. And tonight might be the time to do it. Shut it out. Okay, you're a CAD. Yep, just as I would expect. We got a little bit of a CAD strength coming up, but I don't see, well, yeah, I can see it still coming down to about 1.41. This is going to be more about euro weakness than it is about CAD weakness. CAD strength, pound CAD, same thing. Nice. Like to see a little bit more bearishness, and let's come back down. I can see this rebalance here to about 1.61. So pound CAD, I'm still bearish on pound CAD. I would be shorting it, and I did short it, a couple of weeks ago, 3 weeks ago. We made some gains, and that was it. Your NCD, frustrating. Looking like it hadn't created a new, it created a new high, and then now it's starting to look like it's trying to come down. From a channel standpoint, it looked like a nice little channel, doesn't it? We look like we're getting this nice little channel here on, and make this symmetrical if you don't mind. Look at that right there. You guys see it? That don't look too symmetrical at all. Nice try with my trend lines, right? I just tell you, retail things is just, I'm being a bad retail trader here with the retail concept on these trend lines. But anyway, I'm looking for it to break this level right here, this range that we've been in. And I want to see it come down to about 1.72, and I'm looking for it to drop all the way down to 1.61. Yeah, and this is really going to be about this currency strength when it comes to odd and NCD, because euro and pound is not that strong currency right now, but pound NCD can, and it'll look like it's about pound and NCD's time. This might be the month for pound and NCD. I think this is going to be the month that's going to do it, starting this week. Okay, pound NCD. Ooh, this is even a better setup than euro NCD. This not, that flag was not going up. This is going sideways. So I like this. I like this a lot. So this is showing a nice channel. Not channel, a nice range right there. But I need to see this. I need to see this break, right? This is going to be the deciding factor right here on this price, that low. We see that break of structure. I'm good. This is the break of structure I need to see, the break of structure. And then we're going down. 1.98, pound NCD, great setup to sell. All right, let's get into some minor crosses. CAD Swiss French, what are we doing? We're going to range. We're going to range, and then we're going to shoot up, okay? This is going to be more about that Swiss French weakness. Boy, we got a long way to go. Jeez, this thing did not rebalance for a while. Did not rebalance for a while. Let me see. Did it get 50% here? Nope. How about here? That came pretty close. All right, let's take this back down. About right there. How about down? Nope. Nope. Okay. Yep. So I'm seeing it coming back up. So it's going to be more about Swiss French. I'm bullish. Swiss French hasn't changed. Euro pound. I think this may. I think we've still got some room to go down. I'm going to be bearish on Euro pound. Let's keep my stance on that. Pound Swiss French, have my bias changed? Nope, we're going to be bullish, right? This is going to be more about Swiss French weakness. So I'm bullish on pound Swiss French. Odd CAD, going a little bit faster. Odd CAD, oops, we're shooting up. Let's go. I'm bullish. This is a great pace to buy. If we haven't bought already, and even though it looked like we came back, this is a great time to go long. Odd CAD, NCD CAD, I'm not moving this. Let's go. I'm bullish. Odd Swiss French, not moving it. Even though you went down a little bit, frustrating. I'm gonna move this a little bit down. That's fine. Let's go. Nice setup on these pairs. Like these miners. Look, these are a little frustrating falls. Don't get me wrong. Very frustrating. You can be going long right here, and it's still keep going down, keep going down, keep going down. I would say keep buying, keep buying, keep buying. To be honest with you, I'll switch French. It's bullish. NCD switch French. My gosh, this is going to be a nice. It's all about US switch. It's all about Swiss French. When Swiss French starts dropping, this thing's going to be shooting up. But right now, this might be the week, right? Because of odd and NCD. Okay, odd NCD is going to be a little bit of tricky. I think this is going to fall a little bit further. And I thought I was going to be bullish, and I'm going to have to change my stance and say this is going to go bearish. Right here. I think we're going to come back down here. We're going to cover this imbalance. We're going to go 100%. This is going to be one range in pairs, and then boom. All right, odd NCD, bearish, Euro switch France. Yeah, I think we're done. Let's go. Gee, this thing would have been one frustrating because of the Swiss French strength, and I think this is going to go bullish. Okay. Yeah, okay, this is my oil. That was my oil analysis. 82, I think we hit it. Yep. Loosen way there. Okay, now let's start going down the other way. So I am looking for dollar oil to go there. All right, and that will conclude my weekly analysis on the top-down analysis, and then we'll start to formulate our plan for the rest of the week. I hope this is helpful for you. All right, I'm done there.